What if I told you that a single article written by a hedge fund strategist last November has become the blueprint for reshaping the entire global economy? Today, we're decoding the mysterious User's Guide to Restructuring the Global Trading System, the document driving Trump's most controversial economic policies and causing chaos on Wall Street. This isn't just about tariffs or trade wars. This is about fundamentally rewiring how the world economy works. And by the end of this video, you'll understand the master plan behind policies that seem completely insane on the surface. The story begins with Stephen Milan, now chairman of the White House Economic Council. Back when he was still a hedge fund strategist, he published this radical article that most people ignored. The policy suggestions were so extreme that nobody took them seriously. But then something incredible happened. Trump's policies started matching Milan's suggestions exactly. Suddenly, this obscure article became the most talked about document on Wall Street, especially because of something called the Mar-a-Lago Agreement. I've read this article 4 or 5 times, and you can actually feel Milan's priorities bleeding through, what he thinks America should focus on, what can be sacrificed, and most importantly, what he's trying to hide. Let's break down America's possible goals into 7 categories: economic growth, price stability, manufacturing reshoring, reducing trade deficits, fiscal consolidation, restricting opponent countries, and maintaining dollar dominance. Here's the shocking part. For decades, America always prioritized economic growth above everything else. But Trump has flipped this completely. He's willing to sacrifice economic growth to achieve other goals. Why? Because the US economy has been relatively strong compared to other major countries. So economic growth isn't the main focus anymore. Price stability, that's the Fed's problem. If inflation hits, they can take the blame, not the White House. Now here's where it gets really interesting. The US dollar. Milan keeps saying Trump will maintain the dollar's international status, but I think this is cover-up language. The strong dollar brings massive benefits: low financing costs for Silicon Valley and Wall Street, cheap government borrowing, and incredible financial power. Remember when the US kicked Russia out of SWIFT? That's dollar power in action. But there's a dark side. The strong dollar creates trade deficits and hollows out American manufacturing. China's rise has made this feel like a national security issue, not just an economic problem. But the real crisis is government finances. The US debt is $36 trillion, and interest payments have more than doubled in 3 years, from $330 billion to $880 billion annually. What changed? Interest rates skyrocketed from under 1% to over 4%. The debt amount stayed the same, but the cost exploded. This explains everything Trump is doing, creating a sovereign wealth fund, the Doge Efficiency Department, threatening to cut WHO and NATO funding. It's all about fixing government finances. Milan's master plan centers on tariffs as a negotiating tool. The logic seems brilliant on paper. Tariffs promote manufacturing, generate tax revenue, and restrict opponents. 3 goals with 1 policy. But there's a massive problem. Tariffs cause inflation, which forces the Fed to raise interest rates, which increases government debt costs. This directly conflicts with Trump's core goal of reducing financial pressure. Milan has this elaborate theory about currency offsetting. Basically, other countries will devalue their currencies to compensate for US tariffs, so Americans won't actually pay higher prices. But this creates a contradiction. If tariffs make the dollar stronger, don't we just return to the same trade deficit and manufacturing decline we're trying to fix? Now for the most ambitious part, the Mar-a-Lago Agreement. This is Milan's attempt to recreate the 1985 Plaza Accord, where major countries coordinated to devalue the dollar. The plan has 2 parts. First, get other countries to help sell US dollars. Second, force them to convert their treasury bonds into 50-year, 100-year, or even perpetual bonds. Why would any country agree to this? It's essentially debt restructuring, a disguised default. Countries would bear massive interest rate risks while helping America fix its financial problems. Milan's solution: threaten them with tariffs and withdraw security protection. But even he admits this would be extremely difficult and could cause massive financial market disruption. Here's the irony: Trump's actual implementation was so chaotic that markets immediately punished him. The 10-year Treasury yield spiked 60 basis points in 1 week, forcing Trump to suspend tariffs after just days. US Treasury bonds now carry a Trump risk premium. The randomness has actually weakened America's negotiating position because everyone can see the instability. The ultimate irony: many of Trump's goals actually align with China's interests. Both want manufacturing to return home, both want lower US interest rates. The biggest conflicts are with America's traditional allies and Wall Street. What do you think? Is this economic genius or dangerous chaos? Let me know in the comments below, and subscribe for more deep dives into the policies shaping our world.